I'm a permabull, so I'm always astounded that it's not, 10 or 100 times higher. If everybody saw it, the addressable market, it would already be 100, 200 trillion asset class, right?
It's not a stretch to say that Bitcoin could reach parity with gold. That would imply something closer to $1 million a coin.
You see some established public market companies in different countries saying, we're going to buy 1 billion of Bitcoin, we're going to raise and buy 500. BlackRock ETF, they're even talking about recommended allocations to portfolio managers in the 2% range.
Obviously, digital gold would vastly understate the potential of Bitcoin.
Gentlemen, thank you for joining me.
Of course. Thanks for having us on.
Adam, I was just saying I'm woefully embarrassed. This podcast is almost 8 years old, and this is your first time on the show.
Okay.
This is, but it's an exciting time.
Yeah. And you really dedicated to the podcast. It's been a lot of years, a lot of episodes, right?
It has been.
Cool.
I think we're approaching 700, which is crazy to think.
Wow, that is impressive.
We hit a new all-time high today.
Yeah. Bitcoin doing Bitcoin things. Just as we were on stage at the Talking Hedge kind of asset manager conference, trying to explain to them why they should put Bitcoin in their fund allocations.
Yeah, we were discussing it before we hit record, and I saw Tur's tweet look like Tur's at the event too.
Yeah, he was too.
So 50% held up they have Bitcoin in their personal account, but only 2% or 4% of the funds.
Very few that actually had allocated to Bitcoin. So a lot of them are believers at a personal level, but they haven't been able to sell it within their institution. So they own it themselves, but they haven't quite gotten the boards to agree yet. So, which was a similar situation I was in 2019 when I first proposed it. I had my experience with Bitcoin. I had a very good experience and was trying to convince the pensions in California that they should be looking at adding Bitcoin to the portfolio.
Yeah, and it was great to hear some of your background last night, Sean. So Sean, for those of you who are watching, is the CIO at Blockstream now.
Yeah.
I am really excited to have both of you here because I got into Bitcoin in 2013 and nerded out on the tech side of Bitcoin, the distributed system, mining, full nodes, the layered stack that's been built out. And so I followed probably all the work that you guys have done at Blockstream since you've been around. And it's been really cool to see everything you've done from the Blockstream satellite. I've broadcast some transactions through that before to Jade, CLN, or excuse me, Core Lightning now, the Liquid. And now over the last few years, really sort of leaning into the financialized part of Bitcoin, the Bitcoinization of finance, as I like to reference it. And so, Adam, how's that transition from being hyper-tech, research focused, towards a more financial perspective on Bitcoin been?
Well, actually, in our 2014 kickoff meeting, with the founders sitting around a big whiteboard, we were trying to forwardcast what we'd have to do to get a Bitcoin layer 2 for, settlement of assets and Bitcoin working. And one of the risks, so we thought we'll build the tech and other people will issue the assets, but we're like, well, they might be lazy, they might not do it. If that happens, we'll have to do it ourselves. So there was a lot of situations like that, actually, where, you would think there would be lots of people building applications, but many people are really just more in business development, and the technology is basically a website and a database and, a Bitcoin core wallet on a server or something like that, right? So we actually ended up building a lot of middleware and getting into asset management. A couple of earlier steps. One was the mining note. So we're doing hosting and mining in our own account. And when it was public that we were hosting, initially Fidelity was the launch customer. They kept coming back to us and saying, no, we need some hosting. And, they looked around and decided that we were the best. We were like, no, we're prop mining. We don't do hosting. But they persuaded us to host them. And then we're like, okay, maybe we should expand and host for other people. And then that became news. And so then a lot of Bitcoiners contacted and says, I've got a dozen miners. Can you host them for me? And of course, if you're hosting for thousands of customers, that's a whole, you need a support team. Somebody has got 2 miners and one of them's crashed or failed. They're very upset, right? Because it's half their revenue. Whereas somebody's got, 10,000 per client it's just part of the, maintenance cycle, like a big data center. Disks fail 1% a year. You replace them when they die. They're all RAID. It doesn't matter, right? So it's kind of that phenomena. So we try to figure out, well, how can we help people do this without creating that pain point? And so we designed this mining note concept where it's kind of socialized so that collectively they look like one of the enterprise customers. And then we put a 10% buffer in it so that we would eat the first 10% of equipment failure. So they wouldn't get, the drooping hash rate as miners like failed due to age for the onset. And we also figured out how to try and make them a unified market. So, we're selling more tranches into the market. This started in 2021, a 3-year product. And, there were some people on the launch tranche and then some people 3 months later. So what we do is look at how many Bitcoin it had mined in the first 3 months. We buy that and then match it with a 33-month contract for the next one. And so be economically equivalent, neither dilutive or anti-dilutive for the buyer. And therefore they could trade in a unified market, even though there were 8 sales tranches over the first, 12 months or something like that. And that market, it was initially using liquid security tokens with Stocker, a European company that does the securitization, the legal part of it, the setup, right? So they're licensed Luxembourg security fund managers, and they were the share registration and the enrollment for it. And initially people were OTC trading in a Telegram, but they'd get scammed. People would pretend to be somebody, take the Bitcoin, not deliver the contract all the way around. And until Sideswap appeared, which is Sideswap's a Swedish company that built a trustless trading platform on Liquid. And it's a great form of innovation because they just appeared out of nowhere. We'd never heard of them, and they stood up, they have a functioning trustless market. And we said, that's cool. Can you add support for the security tokens? And they quickly did that. And after that, that was the go-to place. Nobody got scammed anymore because it's a kind of trustless trade. So you got atomic swap, and it's a central order book, but it's non-custodial. So what you're doing is you're signing a limit order, uploading that to the server, and then going offline. And if they match your price, they can take it. And if somebody compromises the server, all they can do is pay the asking price. So you don't really have that custody risk anymore. And subsequently, they added Jade hardware wallet support for the limit order approval. So you actually have your, if you're trading Bitcoin for stablecoin, all the assets on your hardware wallet, you set up a limit order. You want to buy Bitcoin if it dips to here, go offline. If you get off a flight or come online again, it might be swapped or it might not, but you can be offline when that happens without custodial risk, which is, maybe getting on for the safest way in terms of custody risk factors to trade in the kind of Bitcoin related area. So that was our start. And then later, I was talking with Ter Demeester about what became Advent Capital. And so, when he decided to bow out of that, I was like, well, that was a cool thing you had going, and maybe Blockstream could be a new home for it. So we kind of took it on. Didn't really get to starting it, but we were seeing some sort of market gaps, which every Bitcoiner is aware of. Shortage of dollars, dollar interest rates are super high, funding rates are very high for margin trading. So, and yet on the other hand, there are massive pools of fixed income taking what have been really low interest rates for a while. So we figured so our approach is just to try and fix any problems that come up. That's why we're doing all the things, right? And so we recruited Sean Bill, because who better to get out of that institutional money than the guy that was, a hedge fund manager, but then for a while inside the pension fund, trying to get it passed and trying to find asset managers that will pass the due diligence. So he's been both sides of the fence, and he knows a lot of these guys. And, is quite well known for having the first, being the CIO of the first pension fund to put Bitcoin on the balance sheet in 2021. So here we are. That's what we're in Texas for, to go to a few different conferences, meeting with and talking and socializing with that crowd.
Yeah. And Sean, you were explaining it last night, the effort to get Bitcoin on the balance sheet of the pension, and the story is pretty funny. There's some collateral damage, but So for viewers that maybe aren't super familiar with pensions, generally speaking,
these are, for the most part, either corporations or public entities. And so I was working with public entities. And so that means it's taxpayer dollars, right? And so the folks that are running that money tend to be very conservative because it is taxpayer money. And when I was looking at Bitcoin, I thought, geez, this is a really interesting asset. The correlation at that time was extremely low. This is before, PayPal or Cash App, or allowing people to get in and out easily. And we got a little bit more of a kind of risk on, risk off correlation that happened there for a while. But before that, it was like, pretty much 0 to 0.15. And then of course it had a lot of volatility. So I was like, looking at it, I'm like, I inserted it into my mean variance optimizers to look at my portfolio. I'm like, gosh, everywhere you put it in, it helps. It makes a better risk adjusted return. And so when I was playing around with it, I thought, okay, what would be like a reasonable kind of first, approach to this to try to socialize this idea with the pension boards. And you got to remember, pension boards have half the board is usually labor unions, and half is the sponsoring entity, that's the taxpayer entity. And so you have, generally speaking, a very much older crowd on the pension boards. So they're not going to be familiar with Bitcoin at all, right? And so I went in, I was like, I kind of did some test messaging, kind of tried different things out, like, this is digital, I lost them, let's pull that back. Let's try, digital gold. Oh, got a couple of gold bugs on the board that are really interested in gold, and they're actually listening and paying a little bit of attention. And so kind of started with that as kind of the idea, like, okay, obviously digital gold would vastly understate the potential of Bitcoin, but, to start and just kind of get the conversation going, it was something that they could latch onto and understand. So that's kind of where we started. We started with that conversation, and we did that for about a year and a half. And we brought in a lot of other outside experts because it's always good for credibility if you have other outside people coming in. So we had a lot of folks like Dan Moorhead and Mark Yusko and Anthony Pompliano and different folks that would come in once a quarter just to kind of, give an update on what they're thinking on digital assets and Bitcoin. And then eventually we were able to, I made my formal request, to put 1 to 3% in, got shut down. I think I might have brought it back one more time, got shot down again. And I was like, okay, this is okay. It took me 6 runs to get high yield added to the portfolio, right? Because that's how conservative they are. But eventually I got high yield in. And I was like, so then Skybridge, the fellows over there, Troy Gajewski, Ray Nolte, and Anthony Scaramucci had asked me if I would be interested in seeding a Bitcoin fund. And I thought, oh, that's interesting. I knew it would not pass the board. So I said, well, we are your largest LP in the United States. And, our limited partner agreement allows you to put up to 15% into discretionary ideas. And Bitcoin could be your discretionary idea. And, if you chose to do that, I will write the memos to try to provide coverage for you to think that this is a sound decision. And that's how we originally got in. We went in through Skybridge. The assets were custodian at Fidelity Digital Assets. And I think the initial allocation between the healthcare trust and the pension was about 45 basis points, 0.5%. And that was, I think, 17,000 on Bitcoin at that time. That was 2021 when we actually got it in. We started in 2019, but it took quite a while. And then the opportunity came to try to kind of backdoor in.
And it's... when you consider the state of a lot of these pensions, like underfunded, and totally understand the conservative nature of the boards and the investment committees, but when you look out at the landscape of what's happening in markets, particularly with debt and with bonds specifically, like TLT underperforming massively recently, as a Bitcoiner, as an investor trying to convince these pensions as well, there's something like, whenever I'm talking to some of these people, it's like, the lack of urgency around Bitcoin, which has been around for 16 years, best performing asset over that period, like at what point does it become obvious? And
I think it's definitely changed a lot. I mean, like, so I did a presentation at the State Association of California Retirement Systems in 2022, and just talking about how we did it at Santa Clara. How did we get, Bitcoin into the portfolio? And that was, definitely a lot of skepticism at that time. Certainly not a lot of questions from the audience or anything. When we were there last week, they invited us back. They said, hey, there's a lot of interest in Bitcoin. We'd love to have you come back and talk a little bit about, an update on that last thing that you did in 2022. And so Adam and I went out there, and Adam did a session. And, I think we had probably 500 or 600 people in that session, which was, pretty much everybody at Sackers that came out for that conference. So that's trustees, that's the investment officers, the consultants, they're all there. And it was one of the most highly attended sessions. And the second day, because the first day was kind of like just a high level talk about Bitcoin. And then the second day, we went into kind of how it fits into a portfolio. And we got like, I think 30, 35 questions, which I was told was like more than all the other sessions combined, it was a lot of questions. Like, I mean, and these are folks that, they don't want to, they're kind of a little more conservative about asking questions in public, right? Because they're supposed to be fiduciaries. They have to know what's going on. And so we're really excited to see them actually kind of break out and say, hey, okay, we want to know, like, what's the answer to this, that, and this, and it went on. We had a lot of questions from folks.
And they were like reasonable questions. Like they clearly spent some time learning to be able to develop and articulate those questions. So it's interesting to see, but still, the overall flavor is it's still early. They're grappling with things that, we probably saw in 2013 or 2014 in terms of like what would be discussed on a financial news show back then. So they're still feeling their way around in an early stage. But I think ultimately that just indicates it still is early.
Sup, freaks. This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Well, on that point, Adam, where we stand today, new all-time high, 109,000. Has Bitcoin exceeded your expectations of where it would be today? Is it right in line? Is it underperforming where you thought it would be today?
I mean, I'm a permabull, so I'm always astounded that it's not, 10 or 100 times higher, because I'm like you were just sort of indicating, why don't they see it? It's obvious. We've been in it for so long. What would it take for them to, see reality? But, I think if everybody saw it, the addressable market, it would already be 100 or 200 trillion asset class, right? And so that fact that people are still struggling with it and at different stages of their Bitcoin journey is what makes it cheap today. So, I genuinely think like the 100,000-ish mark is cheap because, we had 69,000 the previous cycle, and then that second all-time high, 74.5. That's a long time ago, and there's been a lot of money printing since then. So 100 is not that high, and there is a lot of things that have changed. The BlackRock ETF, the spot ETF, which is a good reference for people from the institutional world that BlackRock is there, and they're even talking about recommended allocations to portfolio managers in the 2% range. That's a lot of cover for those guys to not get fired for copying that suggestion, right? And then you've got post-halving, BlackRock ETF absorbed 2 times the mined Bitcoin per day. MicroStrategy absorbed 2 times. There are other strategy companies. There are individuals, dollar cost averaging through, River, Swan, Unchained, all these companies. And it's still only 100,000. I'm like, who's selling? How is this possible? It doesn't quite add up to me. There's all this, repeat buying, and the price is still only 100,000. So I think, ultimately, of course, going back last year or two, there are a lot of bankruptcies from the excesses of DeFi and the things that got contagion via Three Arrows, Genesis, and the firms unfortunately affected by that, and FTX and all that stuff. So those bankruptcies sold a lot of Bitcoin into the market, so that definitely contributes to the bear market. But pretty sure that's all washed out now. And actually, the FTX is paying back different tranches of investors over time. So I think there was another tranche the last day or two. So that may have contributed to the pop, which is, that bankruptcy presumably sold this Bitcoin around $25,000. Now people get their money back and they're like, well, I can buy it back at 4 times the price, but I guess I better do it. It'll be 5 times or more soon, right? So they're back in market buying back. Because the FTX bankruptcy is saying they did a good job and they got 100% of the money back or maybe a little premium on top, including interest, but not on a Bitcoin basis they didn't, because they sold it, pushed the market down while they're doing it, right? So it's kind of a bad job from a Bitcoiner perspective.
Yeah. I saw earlier this week they sold the FTX stake in Anthropic, which was at a pre-seed valuation. Would be worth multiple billions.
Oh, yeah.
Today.
Got one right on that one.
Yeah. It is like, do you feel like this is a different cycle when you factor in BlackRock, nation states, individual states, the corporate treasury play?
Yeah, I mean, there are some people who are drawing a diminishing return inference, but I think that they're reading too much into it. We don't have many samples in terms of number of halvings for a trend, and the prior one was influenced by a lot of external factors: COVID, supply chain, quantitative easing, wave of bankruptcies, the contagion. And so, technology sometimes goes through S-curves where things get steeper, and the sheer, volume of systematic buying by new entities that weren't there a few years ago, and the regulatory improvement, like all these different regulations that have improved, and the kind of institutional cover of some of the bigger entities that people would reference. In the IT world, you'd say nobody gets fired for buying IBM. In the institutional world, you don't get fired for following BlackRock's recommendation, right? Yeah. So it's a blue chip brand name there. So I think that's a lot of things, and the Bitcoin treasury company phenomena is picking up pace. You'll see 1 or 2 announced every week or 2 now. So, they're all in the game, and you see some established public market companies in different countries saying, oh, we're going to buy $1 billion of Bitcoin, or we're going to raise and buy 500. So, that could snowball, and there is only so much Bitcoin being mined. There's only so much Bitcoin on exchanges. So, when, new wave of demand meets sort of mathematical scarcity, there's only one possible outcome, right?
Yeah. And like, to add to those factors, like, I think you look at what's going on this week, Japanese bond yields blowing out, U.S. bond yields blowing out here.
10 bips today on the 30-year.
Yeah.
It's a big move in bond land.
It's a big move, over 5%.
Yeah.
10 years over 4.5, I believe, last I checked. Yeah. And this is like a trend. I've been saying this on the show for like the last 6 months. Like, when I think of sort of one of the bigger themes for this cycle, obviously nation state adoption, corporate treasury adoption is top of people's minds right now. But I think the recognition of the credit system and the incumbent financial world being relatively weak, and my hope, and I am inclined to believe that more and more people are going to believe this, is that they recognize Bitcoin as super collateral. This idea of Bitcoin being introduced into structured credit products to improve a credit return, and in doing so, actually manufacture the soft landing that Janet Yellen and many others were talking about not too long ago. It's like literally recapitalizing the credit stack with Bitcoin as collateral.
So it sounds like a lot of things Sean's been working on in Prime Meridian and now with Blockstream.
Yeah, I mean, we're definitely big believers that Bitcoin represents, pristine collateral. And so when we're going out, part of the genesis of why do you create a fund, right? Blockstream is really, a technology service provider to the Bitcoin ecosystem, has built so much of this software that the community uses. And we were trying to think, well, how do you get dollars into this ecosystem, right? And, because there's been this massive creation of value with Bitcoin. You're over $2 trillion in market cap, and folks have so much Bitcoin wealth that they've accumulated, but it's not easy really to borrow against it. We have our folks here at Unchained that help with that. But it's still a very niche market. And so when we started thinking about, well, how would you bring dollars into the market so that people don't have to sell the Bitcoin, so they could just borrow against it or what have you. And there's also not just individuals, but there's corporate treasuries now, right? There's a lot of Bitcoin treasuries that were funded when Bitcoin was 20,000 or 25,000 or 30,000. Now it's 100,000. And these runways have extended out from, an 18-month runway to 5 years. So they're in a great position to borrow against their Bitcoin, not have to sell it. And so when we thought about that, we're like, okay, the natural long in Bitcoin is going to be the Emirates, right? The oil countries, Saudi Arabia, the UAE countries, or, the U.S. pensions, foundations, endowments, they're all naturally long dollars. And so how could we facilitate bringing them into this market? Well, we need to create a fund. That is something that's in a form that they're used to, that they understand, that is, we go through and check the boxes, that we have an institutional quality product for you that you can count on is not going to be two guys in a basement in Hong Kong, fooling around. So we kind of approached it from that framework. And otherwise, our activities, we could just do them out of Blockstream treasury, for Bitcoin oriented activities. But for dollars, because, Blockstream has probably one of the original Bitcoin treasuries going back to 2014. And, the company keeps its balances. We, eat our own dog food and are very much a Bitcoin first company. So only really raising dollars when we need it. So that was the problem we were trying to solve for, was what's the vehicle that makes it really easy for these folks to come in and provide dollar liquidity to the Bitcoin ecosystem, which we think will get the flywheel turning faster, help people stay long their Bitcoin, help companies like Unchained when bigger, companies are coming in and try to help them with finding capital, and to just try to accelerate and catalyze that.
The U.S. now has a strategic Bitcoin reserve. That's not clickbait. It's a policy directive. Unchained and the Bitcoin Policy Institute just dropped a new report and are hosting a live event to unpack it. It's called The Strategic Bitcoin Reserve Era Begins. We've got Congressman Nick Begich, Matthew Pines, and Joe Burnett breaking down how the first 100 days of the new administration flipped the policy script on Bitcoin. Go to unchained.com/TFTC to register and read the full report. That's unchained.com/TFTC.
And see it begin to form. Like we're invested in battery finance, and I know we're supporting them, because I think a product like that needs to exist to create a forward-looking duration curve, because I think a lot of people may be spooked, particularly at an institutional level, about Bitcoin's historical volatility. But if you look at a product where you're doing sort of dual collateralized commercial real estate in Bitcoin with a 10-year duration, and if that scales, whether it's commercial real estate, dual collateralized, or just like a 5-year, just pure Bitcoin collateralized lending product for dollars, you can begin to create like a forward-looking duration curve where it's like, okay, I've a pretty good amount of certainty that 95% of the Bitcoin locked in these wallets is not going to get margin called or whatever, or they're not going to get off sides on their loan. And so, that's off the market. So that's to suppress volatility to a certain extent.
And I had the opportunity to meet Andrew from Battery in London. We were on a panel. Alan Farrington put together a conference, and Sam Cartwright, who was a consultant who kind of got the first UK pension into Bitcoin. And they kept it anonymous. They haven't given the name out because, it is, these things are very controversial. Like he's where we were 5 years ago in the US. They just got it into the UK. But I met Andrew, and he was, tell us a bit about the product at Battery. It's super interesting. So this idea that, you may have a commercial loan that also has Bitcoin as, part of the collateral stack is basically like, from a fixed income background, we'd say it's a collateral enhancement or a credit enhancement, right? You're attaching additional enhancement with Bitcoin. And then that can really change the whole risk profile of the underwriting of the loan that you're trying to provide. So it's super interesting. I think it's just, I think battery's at the forefront of this. I think, at Blockstream, we're trying to help facilitate those things. And I think we're still very early days, but I think, you're seeing glimpses of what can be done there.
Yeah. And this makes some people uncomfortable. Do you think this conflicts with the cypherpunk ideals that Bitcoin has grown up on?
Well, I think, some of the value proposition is basically the scope of permissionless internet money. And you see that in the emerging markets in the countries with high inflation, a lot of retail payments, a lot of lightning payments. So I think that's kind of the value driver. But, ultimately, people are going to want to restructure finance using Bitcoin because it offers a lot. And, other than these few, if you look at the Bitcoin market today, it's actually, most of the exchanges are custodial. There's spot markets, there's perpetual futures, high leverage, options, dated futures. That's about it, right? Bitcoin lending, that's interesting. But it's really only recently the interesting structured finance around Bitcoin that's come to market. And I think, Milo and Battery are an example where they can make a Bitcoin mortgage, which is low risk, or even, non-liquidation basis with a shared risk profile, because they are also interested in Bitcoin upside. So they're willing to do a kind of shared upside formula with a different, you pick your poison, right, in terms of your mix of how much deposit, how much collateral, what interest rate. But, there's a shared interest from the structured lender. It's a very interesting formula. And I think there are lots of other opportunities around that to reimagine the world with Bitcoin in the financial system. So I do like the collaborative custody model. So it takes out the, kind of rehypothecation risk of the centralized lenders, which is, kind of how we got into the current mess with the fiat world. It's got a lot of leverage in it, a lot of rehypothecation, and ultimately instability potential, right? So if we can restructure how the world works, now different parts of the world are, more or less structured, right? So the emerging markets, they don't have mortgages, they don't have KYC. It's all like people working for cash week by week. And so for them, being able to get access to global finance is a big deal. About 50% of the world's working population is informal. So they don't have a bank account, they have a contract, they work for cash. So just to get access to the global financial market is huge. So, I think if you look at, for people who were around when the internet was first starting, like as a teenager or something, you could see that, originally there wasn't much going on, no applications, no social media, but, scroll forward a few years and there were, oppressive regimes overthrown, basically, with instant messaging, coordination, and people were able to publish freely in competition with the official line. And, even Western countries grappling with a concept that people compete with mainstream media. And, so the internet had a huge impact. So I think we're still, and if just the internet and the ability to communicate and publish does that, then what do you think, bearer hard money is going to do for the world? It's early days and it's going to change a lot of things. People like Fix the Money, Fix the World, which is your sign up there. Yeah. Mm-hmm. And I think that's the case. And I think it takes time, but part of that is, reimagining and restructuring finance and lots of aspects of human organization around this new hard asset class. And I think, a lot of what makes it work is that wholesome incentives matter, and they seem to scale really well, better than you would expect so far, right? That it's influencing all kinds of people in businesses, in fund management, in banking, in politics, in diplomats. So, that any of those people can invest in Bitcoin and it changes their mindset. So I think hard money actually matters. And even a few countries at this point, right? Bhutan, El Salvador, Abu Dhabi buying their sovereign reserves. So I'm interested to see, the full implications.
Yeah, you call it wholesome incentives, otherwise known as weaponized greed by some other people.
Well, there's Gordon Gekko, right? Greed is good, but greed for Bitcoin is good. Yeah.
Number
cuts to the essence.
Yeah. And in terms of because this institutional adoption, particularly pensions, because I think especially as it stands today in America, there's a ton of, you look at CalPERS, Illinois State Pension, a bunch of others, woefully underfunded. You're looking at how much debt the government's printing, and you look at the amount of people. I think CalPERS alone serves 2 million pensioners. And it's a big problem. And people believe that they're going to get something at the point in time where they go to retire. And anybody who's objective and just looking at the numbers of a lot of these funds, it's like, it's not looking good.
Yeah, it's a little tricky. I mean, so, I'm pretty familiar with California because I was a trustee for the city of San Jose's pension board, and I was sat on the hedge fund selection committee for San Francisco employees retirement system, and was the CIO of Santa Clara VTA's pension. And so kind of got a chance to get up close, and I, got, chance to talk to the folks that run CalPERS and CalSTRS and what have you. And actually some of them are Bitcoiners. Some of those folks are in those chat channels talking about Bitcoin. So they are aware, now when you go to the unfunded liability question, it's very interesting because in the California Constitution, you cannot break a contract on a pension. So, California taxpayer is on the hook either way. If they fall short 200 billion or whatever the number is, the California taxpayers' taxes are going to go up to make up that shortfall. They won't break the contract with the employee. That I think really heightens the awareness of the folks that are trying to run those pensions. Like, okay, we've got to try to figure out how to gradually dig our way out of these, unfunded liabilities. And, my proposition in 2019 was that, if you have a relatively unusual and unique opportunity here for an asymmetric risk reward. If we can put 1% to 3% into Bitcoin, and it's at $7,000 and it goes to $100,000, we could, at 2%, we wipe out the unfunded liability. And we talked about that in our meetings. And we said, okay, if we're wrong, maybe we lose 50%. So that 2% goes down to 1%. And we can make that back in 6 weeks on the rest of our portfolio. Right. So, I think, I do still think that Bitcoin has a tremendous way more upside. So I don't think it's too late. We put a chart up today in our conversations with the Texas pensions that showed Bitcoin, as a percentage of the total market capitalization of financial assets. And it's 2 trillion versus 900 trillion. It's just this tiny little orange dot. Right. And so we're like, you're not too late to get into this. And actually starting with a position, just getting off zero, as Pomp likes to say, just get off zero. Right. And just dip a toe in and get yourself involved. And, I think anyone that's, in the pension space can definitely, probably very, very quickly understand the idea of comparing Bitcoin to digital gold. And if we just kind of start with that's a 10x from here if we just get parity with gold, right? So it could still make a big impact in their portfolios. And so that survey we did, that tour put on Twitter, about half the audience owns Bitcoin personally, but only about 3% of the audience, the institutions that they represent, own Bitcoin. And that's including fund of funds, multi-strat funds, pension funds, college endowment funds that are there. It's still very, very early from institutional. And then the one other point I'd make on that is that my perspective when I was CIO was that this is a great way for the kind of Joe Blow, every man and woman, to get exposure to Bitcoin. Because like I represented, as a CIO, I had bus drivers, train operators, folks that, maybe were making $40,000, $50,000 a year. We had the firemen and the policemen, and generally speaking, those guys, they're pretty stressed out. And when they get home, they're not like doing research on Bitcoin. So like the way for them to get access is actually through their pension to have participation. And so I thought it was a super cool way to kind of really get Bitcoin into the masses and to really, so there's this controversy like, institutions coming into Bitcoin, we don't want that. We want it to be for people. Well, the institutions really are just representing those folks. It's their retirement accounts and stuff. And so you're just buttressing their retirement. You're chipping away at those unfunded liabilities. You're strengthening their pension plans. and you're actually helping them achieve their goals, and you're helping the investment teams achieve their goals, and you're helping the trustees, which are the ultimate ones that are most accountable for those pension plans, take action to help kind of reduce those unfunded liabilities. So I think there's a really strong pathway for Bitcoin and pensions.
Yeah. I mean, how incredible would that story be? Bitcoin saves the pensions. And I believe you're touching on this last night, but I think as Bitcoiners that are in it, I think we have to have a heightened sense of awareness of the sort of public perception of Bitcoin if it does go up significantly and other people get left behind. Whether or not we believe that we just did the research, understood the system, and allocated our money accordingly based off of good information, others didn't, and so therefore we should benefit from that. Like that will not be widely recognized. And so again, that's why I'm very passionate about this intersection of Bitcoin and pensions, Bitcoin and credit, because again, I think it's a way to get people passive exposure that they may not even be aware of that can help them.
I mean, I'm always enthusiastic to see Bitcoiners trying to do something to help other people, right? And so surprising how many people that were involved early in Bitcoin decide to do something, right? It's like Dustin Trammell. He was one of the first people mining Bitcoin in 2009, got bored after his laptop was heating up for a few months and went off and did something else before it had a price. Came back years later and decided he had quite a lot of money and started a VC fund to fund Bitcoin startups. Your managing partner at 1031, doing similar kinds of things, right? Putting Bitcoin capital to work, trying to build the ecosystem. So, it's not just the asset, but you need, technology, you need business development, you need business models to, solve some of these financial problems. So you mentioned battery. So 1031 is helping with that for mortgage use cases for Bitcoin and structured finance. So there's lots of opportunities like that. So it's really good to see people looking at the bigger picture of how the world evolves with Bitcoin as part of it to help everybody, basically.
Yeah, and sometimes I feel like I have to pinch myself because it seems like it's all coming together, and we're definitely in our bubble, and we're living it every day. But whether it's on the capital market side or the tech side, we were talking about hash pools before we hit record, like the emergence of all these second layer solutions, whether it's Lightning, Liquid, Arc, now these Chaumian mints. Like you can squint and you can see the Cypherpunk banking stack of the future being built out right in front of us. And it's almost like we just need to get through this transitionary period of recapitalizing the world with better collateral and then just sort of transition to a better banking stack built on these Bitcoin primitives.
Yeah, I mean, just the removal of, reduction in the influence of money printing, allowing more people and more parts of society to opt out of the hidden tax of inflation. And historically in the developed world, we haven't really felt it that much because it's, they call it 2 or 3%, it's probably 3, 4 or 5%. You don't feel it, but I think since COVID, it's hard to avoid feeling it because it's 25% money supply inflation and it just feeds into everything. And you can't avoid seeing it. And probably the asset price inflation for real estate and things like that is even worse and is going to stay elevated probably for a decade with financial repression. It's not easy to see how the major governments that have this really high debt burden can get their way out of it. I mean, they basically have to inflate their way out of it, plus or minus, because they can't afford to refinance it.
Scott Bessent explicitly admitted that earlier this week.
Yeah, and if you think about that, you peel back that onion. So who benefits from financial repression, right, and inflating your way out of assets? And, well, be guys like us sitting around the room that own a home, that have a 401k, that are benefiting from, the where does the money go when they print it? It goes into the financial markets, into the real estate markets and stuff like that. So this gap between the haves and have-nots gets wider and wider as a result of these central bank policies of zero and ZERP and QE that went on for so long. And again, Bitcoin is this kind of really unique opportunity for the people in El Salvador or the people in Honduras or whatever that don't have access to owning real estate or financial assets, but they can still buy Bitcoin, and they can offset that M2 money growth, or at least protect themselves against that growth. So I think it's just a very powerful tool for folks in terms of like kind of the global democratization of access to finance. And, just actually the basics of being able to actually save money on your phone, right? And be actually able to have an account, have a Bitcoin account, and actually be able to put your savings into that rather than say the Mexican peso or whatever else they're using down there, which, a dollar's depreciated 25%. I don't know what's going on with the emerging markets. I haven't actually spent a lot of time on that. It might be worse. I don't know.
Might have to ask Tether.
Yeah. Yeah.
It's actually happening down there.
Yeah. And so, so that brings up a great point. So, kind of a tangent, but, stable coins and Tether and this whole thing about stable coins. I think it's if you can combine Bitcoin as your savings tool with Tether for your daily, expenditures or what have you, perfect. Right. Spend the fiat, get rid of the fiat, and when you have extra fiat, convert it into Bitcoin and let that grow. And then you have a real good formula for these folks that are in emerging markets. And it's also easier for them to ship money back home. Like if you look at folks that are shipping money from the US back down to Honduras, it can be between 6 to 13% fees for those transfers. Right. So, if you can do it with a Lightning or Bitcoin or Tether or whatever, and cut that fee down, that's real money. On $200, you could be sending, $20 of that might be going to Western Union.
Yeah. And even a layer before that, you mentioned Alan Farrington earlier, but I know we've talked about this, but like Jesus DeSoto wrote about like, what is the problem, the number one problem with emerging markets? It's not like it is the money and sometimes the political environment, most importantly, like the inability to have and preserve property rights, which Bitcoin sort of gives you out of the box with private public key cryptography. Yeah. And I think that is often lost and underappreciated by Bitcoiners, particularly with a lens on the emerging world, which is you just unleash a technology that gives them inalienable property rights that they can then build better economies and systems around.
Yeah. Core fundamental building block that maybe previously wasn't accessible that now is, or since 2009, you can't underestimate the impact of that, right? Like for somebody that owns a bodega and maybe was holding their excess savings in the local currency and watching that depreciate, they can now just convert that into Bitcoin and then maybe it actually appreciate for them.
Yeah,
Yeah, interesting question you hear from time to time is, once Bitcoin is fully adopted, and presumably the adoption curve slows down, everybody that wants an allocation has an allocation, and then the question people ask is, well, should you reallocate? And I'm like, no, like this is a perfect savings vehicle, right? If you own like a fraction of a basis point of the supply of Bitcoin, you have command of that fraction of that addressable market of like savings, assuming that Bitcoin is at that point demonetized a lot of monetary premiums in real estate and other assets. And so you have dependable money where you can park savings and preserve its spending power, where today you have to work, you have to be a really successful hedge fund manager to outpace the inflation, in fact, right? And most people are not going to do that, and there's a lot of luck in there for them, so it's risky for them, right? So they're sort of chasing high risk things to try and get a return. That's why you get a lot of excessive gambling kinds of things going on when the interest rate's really low and the inflation's high. So I think that means that ultimately you've got a new environment where you have a hurdle rate, which is you just put your savings in that and you don't have to worry about it. Whereas today you have, it's very risky out there, right? To even hold on to your money. So, when I was managing my personal savings and investments in the early 90s, I was very, very aware that, in the UK at the time, that's when I was living in the UK, they have two indexes, the consumer price index, which they would claim was like 2 or 3%, and the retail price index was like 5 or 6. But, everybody knew that was manipulated and the real number was much worse. And so, if you're not outperforming that, you got this sickening feeling that your savings are actually going backwards and you're trying to fight to like hold on to your savings, right? So Bitcoin actually provides a solution to that. in the long term, right? I mean, in the short term, you get the adoption curve, so that increases the pie. But even once it's fully adopted, I think the prospect of a hard money, and of course gold has some of that, right? So famously, things that you could buy 1,000 years ago for gold are like approximately in the same region, which is amazing kind of data point, right?
Roman times, you get a good tunic. Today, you can get a good suit.
Yeah, that kind of thing, right? It's just like, wow, how did that work? But maybe it's sort of, there's some kind of fundamental, right? There's a certain amount of usage and scarcity. So, yeah. So the prospect of that and being able to depend on that is super valuable. And I think it should really be considered a human right to preserve the value of your savings, right? I mean, you worked for it, and then somebody's sort of stealing it from you by systematic hidden taxes. It's quite pernicious.
It really is. And you've been in the game for quite a while. Cryptography, open distributed systems, and last night you were mentioning DigiCash and why that failed. Do you think we can really get the Cypherpunk banking stack? What's been fascinating to me over the last 2 years, it's really watch the emergence of the interoperability of Bitcoin, Lightning, eCash mints, Arc, Liquid begin to form. And again, you can squint. And I've been fascinated with eCash mints, particularly Fedimint and Cashew. It's been really cool to see how quickly Cashew as a protocol has developed over the last couple of years, comparing what you observed in the 90s and how DigiCash failed versus what we're seeing today.
Well, it's a kind of free banking type of concept, and how Finney was, I mean, he was very early in making some grand pronouncements or speculation about Bitcoin.
December 30th, 2010, I believe.
Yeah, so I think already in 2009, he talked about the addressable market. Like a day after the network launch, he's like, oh, maybe the addressable market is 200 trillion. Like, wow, ahead of the curve, right? And I mean, today we're still that's a lofty goal, but it's much more plausible now, right?
It's one more 100x. 100x.
Yeah. I mean, 10x for gold, another 10x for the addressable market.
Yeah.
Let's give it a few years. We'll get there. And I mean, price is set at the margin, and there's a lot of kind of things in flight that haven't had their effect yet, right? So I think it's super interesting moment here. But I think one of the other things Hal Finney was talking about was a prospect, I think this was on Bitcoin Talk, of a kind of free banking era where you'd have competing Chaumian mints that would be denominated in Bitcoin, but with some different trade-offs, and effectively Fedimint and Cashew are they look like they're that thing, right? And the other kind of organic thing that's transpired is that Lightning seems to have emerged as the glue between the different layers, because it's something that you can connect to everything. So you can kind of pull some money out of Cashew or Fedimint, put it into a Lightning wallet, convert that into Liquid, convert it into Bitcoin. So you've got this kind of atomic swap between Lightning and everything. So it's become the kind of Internet of Money connection for the different layer twos, which is cool to see evolve.
Yeah. I'm talking about wholesome incentives. The Cashew protocol implemented multi-path payments for Lightning, and I thought that was really cool. They're calling them multi-nut payments, but that's one of the problems that exists with Cashew specifically being a single mint operator as opposed to Fedimint with the Federation. Is that how you know that the mint operator is not acting maliciously?
Right.
Fact is, you can never know, but can you create incentives to make sure that they're acting in the favor of the people using the mint?
I mean, the Fedimint argument is that now you need a collusion for that, so you only have to trust the set. Now, so it's got sort of similar model to Liquid actually, and the Fedimint, the original protocol, was something that worked on in a Blockstream research group, and then the tech guy that went over to the startup was a former Blockstream guy. So it's pretty cool to see people, building wallets and applications and using things. And actually, with Liquid, it's a slightly different trade-off, which is you have generally a set of exchanges and people anyway operating businesses, part of the federation. So a kind of public list of people that are members of Liquid Federation or operating nodes. Whereas Fedimint hit on this community concept, which was, we didn't see coming. It was like pretty popular concept, and it feels more kind of hands-on, like you too can participate and start one, right? It's kind of a more community vibe. That's pretty cool.
Yeah. Do you think we're going to get a free banking system on Bitcoin?
I mean, it's, I think we got the makings of it, and it is, even where there are custodians, I think the fact that Bitcoin is assayable and that people expect to be able to withdraw and deposit and have it audited or be able to verify where, show me the coins, show me the proof of reserves, it's promising. So it would be a bad outcome if rehypothecation creeps in, but so far I don't think there's a lot of, and you get some kind of implicit rehypothecation from derivatives. You people who think they own a Bitcoin, who actually own a perpetual future or something. But actually, I think economically, even there isn't really much sort of side contract paper Bitcoin, because there's almost nobody that wants to be short Bitcoin for any period of time. So for everybody with for 99% or whatever the percentage is of people that have a perpetual future or a dated future, there's some basis trader who's bought a physical, who's collecting a dollar yield, who's bought a physical Bitcoin so that he can dare to short it to provide the leverage for the other guy to go long, right? So it's sort of, in fact, the sort of hard money and the volatility is driving almost no fractional behavior, even like at the edges, right?
Yeah. It's fascinating. And going back to like multi-institutional, multi-sig and institutions, like when I look at Bitcoin from a protocol and layered perspective, like the rails which institutions are using to facilitate their business, like they need to be upgraded, right? And like, so it's probably not the pitch to make the institutions right now, but I think over time, like going to institutions and be like, hey, this is, when you're actually like custodying assets on behalf of customers, you should do it this way. It's cryptographically verifiable and much more efficient.
Yeah.
So like moving on.
Yeah, we're hoping that Liquid can use the Bitcoin technology base to deliver that. And so there are a few interesting. There's a bit over 3 billion of assets on Liquid, including the mining notes we were talking about, but also about 1.8 billion of promissory notes in Mexico, which are small business loans. It's financed by a couple of big US banks. And it's basically solving a problem, which is previously those notes were handled with paper in an error-prone way in Mexico. And so it's kind of, a DocuSign workflow thing where you get a resellable certificate representing the note. And they're customized, right? So they're not fungible, interchangeable. But the people that place the loans can resell them. So it's solving a problem, and it's generally bringing on about 100 million a month of new loan flow into Mexico. So it seems to have hit a sweet spot for demand from the Mexican small business and individual loan, and for the US banks that are financing it as a kind of nice risk reward trade off. And some securities like MicroStrategy shares and some other shares. So it's very interesting to see it play out, because it feels very Bitcoin-like, and of course it's a security, so there's share registration agent in the case. Not for the promissory notes because that's the institutions holding those, but for the shares there is a share registration agent, which is Stocker, the Luxembourg company, and there is a custodian, Britannia Securities, that has the underlying shares. But, once you enroll, you can pay somebody with, 100th of a MicroStrategy share, which is about $4 or something, right? So you can split a lunch bill and it's like, oh yeah, have a few fractions, right? And you can do
your ticket to the sailor train.
Yeah. A little ticket. You could do a cash OTC, his $10, give me a couple of those. And then you can do this kind of trustless limit order thing, and actually the price, so this is mostly using SideSwap, but there are other platforms that can do similar things, and that has it's a Bitcoin pair, right? So people are trading MicroStrategy as a kind of relative value trade where they will buy it with Bitcoin and sell it back to Bitcoin when it swings higher. So it's convenient pricing to actually trade it in Bitcoin, but they also have a facility to do stablecoin pairs in the same model. And I guess the unique selling point for it is a 24/7 market. So it doesn't close at an inconvenient time. And particularly with, depending on where you are in the world, some of these things are really awkward to trade. Like from Europe, the Meta Planet one, like the market opens at 2 a.m.
Yeah.
Like, what are you going to do, right? So, with the 24/7 trading, it makes the market. And actually, even though it's a fairly new market, there's a MicroStrategy ADR, like a foreign listing in a Frankfurt exchange, 8 a.m. to 8 p.m. Central European. And for sideswap market in CMSTR, which is like this security note, it's almost matched the Frankfurt weekday volume on a weekend when the Bitcoiners got busy and they saw an opportunity. So very interesting to see that market evolve and move. I mean, because Bitcoin is 24/7 global, right? So to kind of drag the shares that Bitcoiners care about into the bearer eCashville trade settlement world.
I think it's a good example, like the Mexican small business loans. There's that saying in Silicon Valley that to get somebody to use your product, it's got to be 10 times better, right? To get somebody to switch. Mm-hmm. And Mexico is just a great example, right? Because in the U.S. we have some basic rails that work and function. So 10xing that is not easy. Mexico. You still have a very large unbanked population. You still have, relatively disorganized capital markets. You still have this paper process of, trying to get transactions settled. And so for those folks, it's a great use case where you can increase the efficiency, the settlement time, security of the transaction, the monitoring, the oversight, the reporting, all these things come together when you go onto Liquid for these emerging market countries. So I think we'll probably see a lot of folks in these emerging markets be the first movers and adopters over, say, the Western, developed markets, because the solutions there do improve their outcomes 10x.
Yeah, and I think this is a testament to two things. Number one, like timing is important. Like I feel like Liquid's gotten ragged on a lot in the past, but I feel like right now, like the timing, like Liquid makes a lot more sense to people. And then on top of that, it's just like the sort of macroeconomic factors and the technology are like right at the point where it's like, okay, this makes sense to adopt.
Well, I mean, I think, having talked to a lot of Bitcoiners, many of them are not interested in capital markets and shares and trading and investment, right? They're like, everything else is a shitcoin apart from Bitcoin, right?
Yeah.
Fiat, shares, IPOs, stocks, bonds, it's all a shitcoin. They just want to hold the Bitcoin, right? So, they're not the audience actually for that kind of thing, right? And so, I mean, there is a segment of the Bitcoin world which is speculative. I mean, it makes volatility worse, actually, the excessive leverage at times. But ultimately, they are delivering liquidity at least. So if you need to, close a position or do something, you can do that efficiently. And I think the other kind of unforeseen use case that Liquid emerged into is this nodeless Lightning model, which the Aqua wallet I stumbled across. Mm-hmm. So the genesis of that one was Boltz Exchange had a cool submarine swap, like a trustless swap, to add and remove balance from a Lightning channel with a UTXO on chain. And then the first wave of JPEGs, NFTs, caused a sustained high period of fees, and they basically had to pause service because it was disruptive to their business. And during those couple of weeks, they were trying to find a solution, so they rapidly hacked up Liquid Bitcoin atomic swap into on-chain Lightning, because Liquid wasn't impacted by this. And so, for the people that were using that service to rebalance Lightning channels for businesses or power users, like, oh, actually Liquid is better. It's faster, it's cheaper, it's a little bit more privacy. So after the JPEG wave wore off and the fees came way down, it was sticky. They kept using Liquid for the rebalancing. And, because there's only part of the solution, right? 'Cause you still got to establish the channel in the first place, which would be difficult with those fees. But then what happened after that is Samson Moe with the Aqua wallet, this is Jan 3 now, right? He had the idea to implement a Lightning wallet that actually isn't a Lightning wallet, it's a Liquid wallet. And every time, if you want to send Lightning, you call a Bolts Exchange API, it gives you a Liquid address, and you paste in the address of the person who wants to receive. And on the other way around, you give out a Lightning address, which is actually the Bolts Exchange server, and then you receive a Liquid Bitcoin. So the balance is kept in Liquid Bitcoin. And it turns out it has some interesting trade-offs, which is, as a natural side effect, you can receive Lightning payments when you're offline because the Bolts Exchange server is online. You get a kind of slight advantage that Wallet Satoshi has, albeit because it's custodial, that they can manage channels effectively, right? So, but the liquidity in Bolts Exchanges, the Bolts Exchange guys own Bitcoin liquidity, and yet, so you get the advantage of that centrally managed liquidity without having to trust it. It's an atomic swap. So you're sort of trading the Lightning hot wallet risk for the Liquid federated risk, but it's giving you something back. And for a wallet integration, it actually turns out to be an even simpler way to integrate, because you just call in APIs, you've got a little bit of key management. It turned out to be an even simpler Lightning integration. And so a few other companies followed that, Bull Bitcoin, Peach Bitcoin, Wallet, and now Breeze has a second, so they provide SDKs for many different wallets, and they added, they've got their existing model with Greenlight, but they added what they call nodeless Lightning. So they coined that phrase, but it's that model, which is now proving popular. I think one of the things that it simplifies is the need for LSPs. So you don't need inbound liquidity to start, because you can just use Bolts Exchanges. So you can kind of immediate, instant gratification, fast start. No kind of who pays for the LSP liquidity.
You can and send without having
So go. Yeah, there's some downsides. So I mean, you've got that different trade-off, and the minimum fee is a bit higher because you're basically paying for a liquid fee. And so, the Noster tipping somebody wants that's not going to work so well, because, the fee is going to exceed the tip, right? But, you can use a different type of wallet for that use case. But for the general, 50 cents plus, it works great.
Yeah. Again, it's timing. Like, I feel like we just needed to touch and smash these things together.
Well, I mean, I love that kind of innovation, because I'm not a believer in planned innovation. Like, people are going to solve problems that arise and react to interesting building blocks around them, and it sort of kind of evolves biologically. So it was one of those. So it's really interesting to see that evolve.
Yeah. Shifting gears here, but because I have to bring it up because I'm fascinated by CBOT. You started your career on CBOT, Sean?
Yep. Yeah. So I started investing when I was about 12 years old. Started buying stocks, and then by the time I was in college, I was trading commodities. I'd stumbled into the commodity world my senior year of high school. And that's a kind of another side note, because I was really into junk bonds in high school. And so I had sent proposals for takeovers on Harley Davidson to George Roberts at KKR, Colbert Gravis Roberts, and some other folks, and was really focused on high yield markets. And then that all just went away with what happened with Michael Milken and Rudy Giuliani. And so then I was visiting my folks in Indiana, as I was a senior in high school, and they had gotten transferred. And so I was finishing my senior year in California, and my mom was like, "You got to get a haircut," and so I went to the barber shop, and these farmers were talking about specking soybeans. And they're like, "Oh, I had whatever my $5,000 maintenance margin, and I just made $17,000." I was like, "Whoa." I'm like, this is interesting. I was like, excuse me, fellas, where did they trade soybeans? And so they told me about the Chicago Board of Trade. And so I'd seen a little bit on TV with the futures markets, but really, not really thought much about it. But then I was like, okay, this is interesting. So I went down to the Chicago Board of Trade with my mom and saw the gallery there of the floor, and I was sold. I was like, oh my gosh, this is raw pure capitalism. And I was like, this is it. I was already really interested in economics, and I was like, I'd seen Free to Choose with Milton Friedman and some of those video series. And so when I got out of college, I went to work at the Chicago Board of Trade. And so it was kind of funny. I had I started at Prudential Beige because I wanted to get back to California originally from college, and I had a Bloomberg terminal. First time I'd ever seen a Bloomberg. It was this little beige box with this little funny little keyboard. But now I could see like 68 different commodity markets around the world. So I could be charting these things. And so I just started trading, left and right on the commodities. And then I had a couple of blow-ups where I'd been short coffee and into a dock workers strike and things like that, and got caught in limit up moves. And, and so I said to my dad, I said, geez, it's like, I kind of feel like I need to go to Chicago to learn this business. And he says, well, he's like, okay. He's like, you want to leave that job? It's a good job. I was like, yeah, I think so. And he's like, well, how much money do you have? I was like, I got a $500 credit limit because I just got my first credit card out of college, and I had $500 in the bank. I said, I might need to borrow a couple $1,000 from you to kind of get going in Chicago. I said, oh, no. He's like, you'll be fine. He's like, there's a YMCA. and Chicago Avenue. He's like, you just go move into the Y. If you really want to do it, that'll be just fine. so I went to Chicago with $1,000 in my pocket, and was paying $168 a week for rent at the YMCA. And the YMCA back at 40 Chicago Ave in those days was basically either people with an addiction issue or middle-aged men going through a divorce. And so, it was a really interesting experience for me. And it really put a lot of fire in the belly. So I went down to the Board of Trade and just started handing out resumes because back then they didn't, cell phones and things like that were not very common. And, the AOL and CompuServe were kind of the online at the time. And so I just handed out my resumes, and I had a switchboard, and on my resume it had the YMCA and then the switchboard number because, a cell phone was very expensive. And so I came back and they were like, oh, you got 13 calls from, different Board of Trade folks. And one of them was Refco. And so Refco was very famous. I had been an intern at the White House for President Bush 41. I spent 9 months in Washington, D.C., kind of in 1992. And so Refco was very famous for having managed Hillary Clinton's money. And so I knew immediately, I heard the name. I'm like, oh, okay, these guys. I'm like, this is interesting. And so I went in there. And so I had immediately had a Indiana alumni that brought me in, John Newhouse. His son is actually a venture capitalist and pretty active in digital assets. And Mr. Newhouse offered me a job at the same salary as what I was making in San Francisco. I think it was $28,000 back then for clerking in the Eurodollar pit. And then I went in to meet with the Refco guys, and these guys were old school commodity traders. There were two of them, Jim Fritz and John Rabb. And they said, well, this guy had like the gravelly voice because he was a smoker, and they drank a lot. And the ceiling was like yellow from all the smoke. It was kind of crazy. Like they really smoked a lot in Chicago, and I've been out of California. I'm not used to that. And so I go in there, and he's all, he's like, we saw your resume, and I saw that you had interned for President Bush 41, fine man, and but that you now live at the YMCA. It's like, we thought we have to bring you in just to hear the story. And so, So I ended up chatting with those fellas, and I said, I have this offer from John Newhouse over at Newhouse Trading, was a very well-known commodity trader. It's like, do you think you guys could match that? And they're like, nope. They're like, if you want to work for Refco, everybody starts at the same spot and has to work their way up. It's all merit. And I was like, oh, shit. I was like, okay. So I had one friend who was in the hedge fund business, this guy, Chris Kang, who worked for Mark Strom. And Mark Strom was one of the first hedge funds to hit $1 billion under management at that time. And so I called Chris Kang Collect from the YMCA. And he picks up the phone, and he had a very foul mouth. He was like, just really swore every other word. And he's like, what the are you calling me Collect for? He's like, they just announced this on the speaker over by intercom. He's like, they're gonna put me in the closet. He's like, what the hell are you doing? I was like, dude, I got a question for you. I was like, got this offer from Refco. It's $5.65 an hour, or Newhouse Trading, $28,000. He's like, you dumbass. He's like, I can't believe you're wasting my time on this. You already know the answer. He's like, you should take the ref co job. I was like, oh shit. I knew it, but I needed to hear from a buddy that was in the game. And so I took that job, and then I think it was like 2 weeks later or 3 weeks later, they put me aside. They're like, hey, we just wanted to see how much you wanted the job. We're going to move you up to 28. And so that was kind of my introduction to the Board of Trade culture. It was, I describe it a lot. It was like being in high school, as a lot of friends, working with each other and trading with each other, and very strong camaraderie on the floor. And it was a fantastic learning experience, because if you think about futures and the built-in leverage, it's, I would describe it's like driving a Formula One car. You have a small twitch of the steering wheel, and all of a sudden you're into the wall, right? So you really have to be laser focused, and by being laser focused with that kind of leverage, you learn faster. And then just by being down on the floor, the exposure to the folks that you're learning from is just incredible, right? So I learned how to chart from Tom Dennis and Ron Vanderheyden, who worked for Richard Dennis, who was like one of the original pioneers of trend following and momentum trading and futures. And so it was just it was a fantastic learning experience. And after about 4 years, I was like, okay, I think I've learned everything I can learn, in Chicago. And there was also kind of an idea circulating within Chicago that it would be going electronic, and it took much longer than I ever would have thought. But I you could kind of see the writing on the wall that it was coming, that it was going to all be electronic trading soon. And so I was like, okay, I think, I've learned what I can learn here. And I went back to California and got into the bond trading side of things.
No, I brought that up selfishly because I'm jealous, because I worked at a managed futures fund in West Jackson out of college, and a lot of my coworkers were ex CBOT traders, and they would just talk nostalgically about the days on the floor.
Wonderful atmosphere.
And compared to I lived in New York for many years too, and New York finance compared to Chicago, New York's fast, quick, and a bit aggressive. Chicago's salt of the earth.
I would say one's very transactional and one's more relationship driven. Whereas also I would say, I kind of always viewed, I had offers to go to New York for pretty obscene amounts of money, to be honest. And I'd go visit. I was like, man, this is like a dormitory for worker bees. I don't want to live in New York. No offense to the New Yorkers, but I'd rather be visiting New York, it's a different culture, No,
but another point to bring up CBOT too. You mentioned this last night, commodities traders, Bitcoin,
very
you're
natural
studying
evolution.
those markets, and you brought up the dock strike on the coffee port. I was following obscure funguses in Brazil on the coffee plant to figure out what was happening in those markets. But
we own barges. The company I worked for, Refco, Tom Dittmer was the founder, and he sold out in '98, I believe. But he was a farm guy from Iowa, middle class guy who had made $1 billion for himself trading commodities, and he owned barges that we would run up and down the different rivers, and it was all just for market intelligence. If they broke even on the barge, they were happy. On the Panamexes, we had Panamex vessels down in New Orleans that we would do for shipping freight or grain, and so that was really just intelligence gathering. So to know when the Chinese were coming in to buy wheat, we'd get the calls for booking freight. And okay, let's start buying calls on out of the money calls on wheat, and back then, commodities trading doesn't have the same rules as stock trading, so you could trade all that stuff. And the biggest traders, the most successful traders I met in Chicago were the spread traders that were doing relative value trades, and those are the most consistently successful traders. So it was super interesting, just kind of observing the different types. So you had your floor trader, your local, you had your kind of swing traders that were upstairs, you had these spread traders, you had these kind of trend followers, and just so many different types.
The turtles.
The turtles. So I have great stories about the turtles. I mean, so Tom Dennis, Richard Dennis, he's the one that created the turtles, Richard Dennis. And so I just was new to Chicago, didn't know anybody at all. I was living in the YMCA. I didn't really want to go back there. So I would hang out on the board of trade floor after it closed. And, it'd come down to me and Tom Dennis. And Tom Dennis and Ron Vanderheyden would be doing their charts by hand on the books back then. They had the little trade books, then they'd have to fill in the days high, low, close, open, all that. And so I just approached those guys. I said, hey guys, I'm like, listen, newbie here, could you tell me how this charting thing works and like, what should I be, doing here? And so every day we just, we charted the markets and, I kind of learned these things that I was sure the turtles all were getting exposure to, but you start from the right and read to the left. And so you want to overweight the current price activity versus the historical price activity. We want to pick our pivot points based on if we had let's say a reversal off a high. Rather than picking the absolute high day, we want to look for the day where it opened on the high and closed on the low, where the sentiment shifted, right? And make that as our point for connecting the dots. And so then I got to meet Tom DeMark, and we were, Tom DeMark's an amazing technician. And then Steve Nissan, who's widely accredited with bringing candlesticks to America. I took his classes. I worked with Sheldon Natenberg, who wrote the book Option Pricing and Volatility Theory. Larry McMillan came in to teach classes for another options guru. Had a lot of friends, at O'Connor Associates and Swiss Bank Corp that were trading options. And so it was just a very, a great place to learn the markets and to get a lot of exposure very quickly. And, definitely gave me a massive advantage, I think, in the fixed income world when I switched over. Because what we started looking at was we would trade, Polish 5-year forwards versus Euro 5-year forwards on a spread basis. And, we'd be using our technicals, on custom indexes on Bloomberg. Nobody was playing that game. And so it was like, you just had this huge edge over these folks. And, we're trying to figure out what those things look like in this space, in the Bitcoin space. But I think that, the board of trade, if I could send kids back in time to kind of cut their teeth there, I would do that all day.
Yeah. No, again, it had gone completely digital by the time I left college. And so like everybody was just talking nostalgic about it. But the reason I bring it up too is because like these sort of market structures and tools need to be built for Bitcoin. I think much of the fascination around potential futures contracts has been focused on the mining industry. Like, how do you create a market for hash rate futures, block space futures, fee futures, whatever it may be? And I think that's one nut that has not been so successfully cracked at scale for Bitcoin. And if it is cracked, could be massive for not only the mining industry, but Bitcoin in general. Because you think of whether it's a union strike at a coffee plant or a fungus somewhere in Brazil. Bitcoin has different things, like a China mining ban, a winter storm here in Texas, or a very hot summer up in North Dakota, whatever it may be.
Yeah. Adam and I were bouncing some ideas, because back when we were in the commodity markets, we had the open interest, the commercial open interest that you could track, right? And, so in, say like corn, for example, there's a natural short to the market, would be the commercial, right? And so, as they're expecting, if they expect that, a normal average crop, they'll have their short position to hedge out their exposure. But if, let's say they think that all of a sudden the crop is going to be much smaller than expected, they will close out those shorts, and you could track it on the open interest. And so we're trying to think like, who's the natural short for Bitcoin? And like, there's really not like necessarily other, maybe miners could be in a position where they could be a natural short, where they could short Bitcoin today with the expectation they're going to cover that short with future production of Bitcoin from the mining activity. But like, that's kind of the only one I could think of, because I was trying to figure out like, who could you track and how could you, because, sometimes the commercials are the smartest players in the game, and you want to understand what they're doing and how they're moving their position. But yeah, we were kind of noodling on that, like, who would be naturally, well, it's been very challenging to be naturally short the Bitcoin market. So
that's kind of dangerous, right?
Yeah, very dangerous, right? You have to have, really the only guys I think that I could think of could be a miner that could actually take that chance.
Yeah.
And, if they can avoid it, they're going to try to probably avoid it, right? So it's not necessarily good for tracking purposes, but yeah, there's a lot of interesting elements. I do think that the reason you see these large proprietary shops out of Chicago that are trading Bitcoin, so like DRW and some of these folks, is that lineage back to the futures markets. I think that Bitcoin, because perps and stuff, you have built-in leverage, and you can trade trade that stuff pretty aggressively, and it does feel and look a lot. It trades a lot like what a futures trader would be used to trading.
Yeah,
So it would be a very natural, I think, evolution for those folks to go into that space. I'm a little surprised, to be honest, that there aren't more of them in there.
Agreed. There's something there, but I think who is the natural short? Like, even if a miner could do it with hash rate growing, like, unless you're reinvesting in your ASIC fleet and able to keep a commensurate amount of overall hash rate percentage, that just gets riskier over time with variance risks that gets introduced. And
not a good natural short anywhere.
Well, I mean, at least they could, they can mine Bitcoin to replace it. Whether the price goes up or down, they're still accumulate Bitcoin. Like, they might accumulate more or less depending on what the hash rate does if the price is down. But for most people, borrowing Bitcoin is like a super bad idea, right?
Yeah. What I know we got to get going here soon. What any predictions, thoughts, expectations for the rest of the year for Bitcoin?
Yeah, I don't know. It's just kicking off today, right? So it's a new all-time high since last was in February. So, presumably this is not a one and done, right? So this could be the start.
Are you a mega candle?
Well, I don't know about that, but I just think that, I mean, the mega candle theory. Okay, I think you started it. So it's just that you could see a daily candle that was $10,000, right? And of course, that gets easier to achieve as the price is higher because it's a smaller percentage. So we've had quite a few days of half of that, like 5,000, excess of 5,000 moves in a day, or closes with 5,000 moves. So, maybe we'll get one of those one of these days. I think they might almost have been like a swing intraday in that region. So we'll see. But I mean, in terms of, where the market gets in this cycle, I think it's becoming harder to predict, because you can see the last cycle was, you got this a new all-time high at the end, which never happened before. People didn't see coming. And I think there are a lot more different participants in the market now who are persistent buyers, and apparently the ETF buyers are a bit more sticky. So what Warren Buffett would call good investors, that they buy more if the price falls, and they don't panic sell. They keep it for the long term, kind of value investor outlook. I think ETF buyer is not generally a day trader, right? There's like put something in a pocket for 5 years, right? So that's probably good for the market structure. And a lot of the institutional investors are longer term outlook, like pension funds, sovereign wealth funds. They're not generally day trader type of people, right? So that affects the money multiplier for how much capital in needs to move the price a certain amount. And I think the other thing is, you see a lot of news flow that looks very positive. Different institutions are talking about announcing that they're going to offer products future tense. But in practice, those institutional or like financial institutions offering Bitcoin-related products to their clients are slow movers. They got policies and training materials and guidance that they got to get through before they actually turn it on, or they turn it on to a different segment of their users. So I think that's still going to land, and it's not here in a big way yet.
Sean, anything from you?
Well, I think to Adam's point, I mean, like, the ETF buyers are accumulating maybe 500,000 a year versus 165,000 of new minted coins. So I think that when I looked at Bitcoin years ago, I thought, boy, it is something that can go very hyperbolic very easily, just because there's such a small float. And there is this tendency for folks that do buy it to sit on it and hold it and take it out of circulation for all intents and purposes. So I think if there's any surprises, they'll be to the upside on magnitude. We were looking at Metcalfe's law and some of those things for for conversations with pensions, and that would definitely get you into the 200,000 plus area sooner than later. But I think it's also pretty fair. It's not a stretch to say that Bitcoin could reach parity with gold. If it's not this cycle, definitely next cycle. And that would imply something closer to $1 million a coin. So I think that I'd be pretty comfortable going on the record that we will finish the year somewhere in the 200 plus area. And I think that if there's a surprise move, it's going to be to the upside, particularly with all these state reserves and strategic reserves. And if these people start buying Bitcoin, and, we have the corporate treasuries that are moving up Bitcoin, right, with the Bitcoin treasury strategies. So I just think the risk is definitely to the upside. I feel like the 64,000, 72,000 area really held well on this last pullback, and the pullback was a little more shallow than I think people would have anticipated. I think as the market cap's going up, we had a chart that we were showing the pensions where as market cap's going up on Bitcoin, the volatility is coming down pretty steadily, and you can get that off Glassnode and what have you. So I think that the risk is definitely skewed to the upside, and that's where I'd be cautious. Like again, don't short whatever you do.
Heard it here first. $1 million Bitcoin. But I'm kidding. Yeah.
Well, you were talking about the bell curve, fat tail.
Yeah.
So that falls into it. You want to explain that?
Yeah. Well, yeah, we can put that chart out on Twitter or something. So if you look at like a bell curve distribution of the monthly returns on S&P and Bitcoin, what you'll see on that bell curve is that the right tail, or the right side of the bell curve, is got a very fat tail. A lot of months with outsized upside performance with Bitcoin. So that is, again, just kind of illustrates that tendency for Bitcoin to surprise to the upside on returns. The left side of the tail's got a little bit fatter tail, but it's not nearly as proportional as the right. It definitely skews positive in terms of return profile.
Yeah, that's why many people, yourself included, it's like time in the market with Bitcoin.
Yeah, time in.
Because the number of days it moves drastically, or
right. That's the interesting data point, right? If you are out of the market for the 12 best performing days in a year, Bitcoin loses money every year. So that's a good reason to hold and not try to time the market, because the odds are against you.
Yeah, I think that's really, really good point for listeners and people that are this is not market advice in any way, but I think in general, take the Warren Buffett approach and let your Bitcoin compound.
But the other thing we were talking about in between talking to the pension guys is that a lot of professionally managed funds do rebalancing, like every month, every quarter. And because of what you're trying to do with Bitcoin, that's not what you want to do. You're trying to get to the asymmetric return, so you need to stay there for 5 years or something, right?
Otherwise, you're doing it wrong. 20% of your portfolio at one point.
Right. I mean, if you just keep rebalancing every time it has a up month, it's not helping you. It's not doing the job.
Yeah. And that's, I think we really have heard this in California and Texas when we're visiting with pensions. There's a very strong cultural bias towards like, okay, we are going to rebalance quarterly at a minimum, and we may actually rebalance monthly, which of course with Bitcoin, you really want to avoid that. With your investment policy statement, you want to make a provision in there that you're going to let the Bitcoin run, to let it have its full potential impact to the portfolio. With everything else, stocks, bonds, all that stuff, it's a good idea to rebalance quarterly. But with Bitcoin, we think that you want to let that one have a much, or if you're going to rebalance, stretch out as long as you can. Maybe it's once a year.
Be bold. Let's be bold.
Yeah.
The times call for boldness. Everybody out there listening.
Yeah.
Sean and Adam, this was an incredible pleasure. Thank you for joining me.
Thank you for having us on.
Thank you for having us on. Enjoyed it.
I mean, most people listening to this know what Blockstream is, but go check out Blockstream if you haven't already. So thank you guys, and let's have a fun night.
Yeah. Thanks.
Peace and love, freaks.
Freaks, thank you for listening to the show. I hope you liked it. If you did like it, please make sure you subscribe, rate, review the show. It helps us out a lot. And also, if you like these conversations, I've come to realize that many people listen to the podcast. They don't know we have another sort of layer of this media company. We have the newsletter, the Bitcoin Brief. Go to tftc.io. Make sure you subscribe there. A lot of the topics that are discussed on this podcast, I write about 5 days a week in the newsletter. We also have the TFTC Elite tier. If you sign up for that, become a member. We have a private Discord server for the elite freaks out there where we're dropping ad-free versions of this show and having discussions about everything we talk about. A day early. Logan wanted me to make sure if you want to get the show a day early, become a TFTC Elite member. You will get that. We have our Discord server. Right now it's conversation between myself and TFTC Elite tier members, but we're going to expand that. We'll probably do closed Q&As with people in the industry. I may be doing Macro Mondays. So join us. Go to tftc.io. Subscribe. Find the button in the top right corner of the website. Become a TFTC Elite member. Thank you for joining us. Okay.